Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first one is titled, Why Palantir Technologies Inc. PLTR Might Be Well Poised for a Surge. That means we're going to be going over their latest news updates, upcoming catalysts, and their new price targets, because analysts have been upgrading at Palantir's price targets, and not many people are talking about that right now, which is exactly what we're going to dive into. After that, we're going to move on to another article titled, Palantir, I'm Still Bullish, but De-risking My Position All the Same. So essentially, this financial reporter is taking into consideration proper risk management and de-risking his portfolio position in regards to his exposure of Palantir Technologies, even though he is overall very bullish on this company. And I think this is one of the best Palantir articles that I've ever read, and I have read hundreds of Palantir articles because I've been reporting on this company for over 2 years, ever since it DPO'd at $10 per share, and right now it's trading at around $20.26 per share. So in this video, we're going to be going over their latest news updates, upcoming catalysts, price targets, and how to properly invest into Palantir Technologies without overexposing yourself too much to unnecessary risk by practicing proper risk management when you are investing into stocks, particularly risky single growth stocks like Palantir. With all of that being said, don't forget to go and annihilate that like button right now, subscribe if you are new, go ahead and become a member of this channel for as little as 99 cents because that's what keeps me here on YouTube, but if not, don't worry, by subscribing, you're going to get this content for absolutely free. And with all of that being said, I say let's jump right into today's stories. Palantir Technologies, as you probably already know, is a big data and analytics company which serves both commercial enterprises as well as government clients, and their ticker symbol is PLTR. Palantir Technologies also specializes in artificial intelligence as well as machine learning, which has catapulted their share price up to $20.25, while very bullish analysts believe this company could surge up to $25 per share over the next few months, which is very bullish and positive for investors. However, there are other analysts who believe this company will eventually pull back despite their bullish pattern that they have given us regarding their stock chart. Overall, Palantir Technologies PLTR stock is a solid choice for investors given the company's remarkable and amazing future growth projections as well as their history of revenue growth and earnings growth. Now, while the stock has been performing very strongly lately, we are going to determine whether or not this trend will continue upwards as analysts are starting to say. So let's dive into what professionals and experts are saying about this particular company, and you should also know that it's good news in general that analysts, experts, and financial reporters are all reflecting very positive earnings estimates for the company's upcoming earnings results, which should reflect positively in the PLTR stock price. First, let's consult Zacks Rank and their ranking system, which ranks various stocks from a rating of 1, which is a strong buying opportunity, to a rating of 5, which is a strong selling opportunity. So essentially, a rating of 1 is a strong buy, a rating of 2 is a regular buying opportunity, a rating of 3 would be a holding opportunity, a rating of 4 would be a selling opportunity, and a rating of 5 is a strong selling opportunity. You should also know that when this institution ranks stocks, their number 1 rated stocks have an average annual return of around 25% or more ever since 2008, meaning that their top stock picks are very impressive. And considering that we have had a lot of strong agreement among analysts who are covering Palantir Technologies, while also giving revised positive estimates for their upcoming earnings report as well as their full year report, this is very bullish and positive, which should increase their overall share price. First, let's go over their revision estimates regarding their earnings. For the current quarter that we are in right now, which is quarter 4 of 2023, the company is anticipated to earn 8 cents per share on the positive side, which is a change of 100% from the same quarter but a year ago. So this is a very impressive surge in their overall earnings, and over the last 30 days, we have seen 2 estimates actually move higher for Palantir in regards to their earnings revision without any negative revisions, and as a result, Zacks has taken note of this and increased their overall target and rating for Palantir Technologies. But that's just for the quarter. What about for the full year? Well, for the full year, the consensus estimate is that Palantir will bring in 25 cents per share, which is very positive, and this would reflect to a 316.67% growth from the prior year number, which is very, very good. But let's jump back to their overall rating for Palantir Technologies. Palantir Technologies is now rated as a strong buying opportunity by Zacks ranking system. And although I am not a huge fan of Zacks, I do think this is a very positive development because a lot of investors do end up consulting Zacks for stocks that they are looking to buy and sell. And now that Zacks has finally jumped on board, calling Palantir Technologies a strong buying opportunity, this should cause more investors to invest into Palantir Technologies, which should increase their overall share price, which is phenomenal news for investors like us who are most likely already involved and invested into Palantir. You should also know that Zacks ranking of a 1 or a 2 on average significantly outperform the S&P 500, meaning that Palantir Technologies has a long growth trajectory ahead of them over the next year. Therefore, investors can invest confidently into Palantir Technologies because of their solid estimate revisions, which have been on the positive side, so much so that it is changing the overall sentiment regarding what analysts and institutions think about Palantir for the positive. So you may want to consider adding Palantir Technologies to your portfolio after you do your own research. I always advocate for you to do your own research to make sure this company is good for your personal portfolio. Overall, this is a phenomenal update regarding news that analysts, experts, institutions, and many others are increasing their overall revisions on the positive end for Palantir Technologies PLTR stock, which is adding to the bullish momentum, and that's why we have already broken above $20 per share for this stock, and analysts believe it could surge up to $25 over the next few months. Now, clearly, I think this is going to be met with some volatility and a potential pullback, but only time will tell. We also have a huge upcoming catalyst in the form of this company joining the S&P 500, where it's only a matter of time before they join, and once that happens, their share price again will go even higher. Now, let's talk about proper risk management. We know Palantir is a great company. We've invested and reported on this company for quite a while now, and I am still very bullish on this company. However, I love how this author is de-risking his portfolio while still being bullish on Palantir Technologies, so let's hear what he has to say. He says Palantir's PLTR stock has been one of his most successful stocks inside his entire portfolio. Palantir is framed as an artificial intelligence leader, and their share price has more than tripled from the start of the year, especially after their decline in 2022. And this surge in their overall share price has been driven by fundamental growth and very impressive results regarding their generative AI technology. However, the question now is whether or not Palantir can keep this momentum up and keep the rally going. The author goes on to state that he has been a long-term supporter of Palantir Technologies ever since their DPO when the share price was originally $10. And if you've been following along with me, you know that we've been reporting on this company ever since they became tradable on the public stock market. So far, the company has received tremendous growth over the long term, and I anticipate a future growth trajectory which will be just as positive. Now, right now, a lot of investors seem to be overreacting for the positive or negative. When the share price drops, a lot of people end up selling out of this company, which is actually the best time to buy this company, not sell this company, and vice versa, because when the company is surging in their overall share price, that's actually the time in which you would want to take some profits and de-risk your portfolio. With Palantir now trading at around $20, this financial reporter is taking this as an opportunity to de-risk his portfolio to sell off roughly a third of his Palantir holdings while remaining bullish and keeping a core position for the long term, and I think that is very intelligent and very wise to do. This means that you're going to be able to take profits now, wait for a pullback, and then reinvest into this company while holding a core position into this company so you can still receive the benefits of this company's value accumulation over the long term. So again, this is a very wise, risk-tolerant risk management strategy that you should also mull over in your mind. You also would want to lower your portfolio exposure to richly valued technology stocks, and Palantir would fall under that category considering that their valuations are extremely high right now. So you would want to take advantage of these high multiples by selling some of your Palantir just a little off the top, get some profits, and potentially wait for a market dip or a pullback in Palantir's share price. Meanwhile, we do know that Wall Street analysts, like we said earlier, are expecting Palantir to generate very impressive revenue growth to where for the full year of 2024, they could bring in $2.66 billion worth of revenue, representing a 20% year-over-year growth rate, which is very impressive. And this could accelerate well into 2025 and beyond. So not only are we going to close 2023 with very bullish estimates, 2024 looks very good with a CAGR of 20%, and 2025 looks spectacular as they continuously grow their revenue and earnings. Now, what I like about this author is that he is just taking a little bit of profits right now, and then he's going to wait for a market dip or a pullback to invest into this company more. But he's being smart here. He is de-risking, and although he admits that there is a lot of opportunity still left into Palantir Technologies, eventually we will experience either a market dip or a pullback, and he's going to take profits and wait for that investment opportunity. He also highlights 4 reasons why he is a long-term bull on Palantir Technologies, and I think this is not talked about enough. For instance, the first part of his thesis is that Palantir's AI/big data applications have tremendous variety in their use cases, meaning that Palantir Technologies has a wide array of market opportunity, which is not necessarily industry specific. Since data is prevalent in almost every single company, this explains how Palantir has a very large addressable market in which these companies could use Palantir's tools. And since Palantir Technologies is both a big data analytics company as well as an artificial intelligence company, both of these segments go hand in hand, because with big data, that feeds AI, so they work together, and that's why Palantir Technologies is a market leader in both of these regards. His next bullet point for his thesis says that he likes Palantir's momentum, especially in their commercial segment, and I've been predicting for quite a while now that eventually Palantir's commercial revenue and their commercial segment will outpace the revenue that they are receiving from their government business. And as the company's commercial segment grows, their revenue will grow with it, and this will positively impact their overall GAAP profitability, which is the author's third point. He says that their free cash flow and GAAP profitability will increase, especially as their commercial sector starts to gain momentum, and since Palantir is already GAAP profitable, that means that this business is self-financing, meaning that they can literally use their own money to grow themselves without the unnecessary risk of taking on debt. And lastly, one of the best things about this company is that they virtually have no debt, and they have over $3 billion worth of cash on hand and or cash equivalents on their balance sheet. This allows them flexibility to either acquire other companies or pursue share buyback programs. In the end, you wouldn't want to overexpose yourself even to a company as phenomenal as Palantir Technologies. If you all know me, you know that I don't advocate for more than a 5% initial portfolio allocation into any singular risky growth company, and anytime some of these companies surge in their overall share price, feel free to take a little bit of profits before the company inevitably pulls back a little. When identifying high growth companies, you want to capitalize on when the company is decreasing in price, and that provides weakness and a buying opportunity for you. On the other hand, when the company is surging, that's when you would want to take a little profit off the top, so you can guarantee that you are making money from this company. And lastly, these risk management policies ensure that you don't put all of your eggs into one basket, because that would be improper risk management where you are taking on unnecessary risk of potential losses. A lot of people and investors who are overexposed by either investing at the wrong time or investing too much, they could be deeply in the red right now. And it's not because the stock or the company is bad, it's because their risk management policies are bad, and that's why they are losing money on phenomenal stocks, including a company like Palantir Technologies, which has more than tripled since their lows in 2022. Therefore, it's very good to regularly monitor and diversify your portfolio so you can take on an appropriate amount of risk regarding your own personal variables. Now, I would also highly recommend that you would check out the rest of this article, which will always be linked in the description box down below, because I always link my sources so you can read these as well. However, the key takeaway from this author is that he has enjoyed Palantir's sharp rally, but investors should be cautious going forward because we don't want this valuation to become too frothy. Therefore, investors should keep a core to their investment into Palantir Technologies and their portfolio and never sell the entire position because this company is so fundamentally strong. However, at times when the company surges, feel free to take just a little profit off the top so you can reinvest that back into the company at a lower share price, or maybe even potentially put it into an index fund, a mutual fund, or ETF, which is a much safer investment. With all of that being said, I would love to hear your thoughts down below about Palantir Technologies PLTR stock. What is your risk management policy for this company, and how high you think the Palantir share price will go? With all of that being said, don't forget to go and annihilate the like button and subscribe if you are new. Don't forget to become a member of this channel, and with all of that being said, I will see you in the next YT video.